Good morning, everybody. It's the 22nd of July. I'm Joe Neighbour from Signal Centre. This is Talking Bull. Hope everybody's doing well. Going to run through the latest headlines today, as well as a brief look at a few markets that we're obviously all interested in, and seeing what they're looking at from a price action perspective, and seeing if we can give you guys any edge for the day ahead. So let's get cracking with the latest headlines. We're going to talk first of all about the ECB. Obviously that was front and center yesterday in terms of importance, and the ECB actually hiked rates by 50 basis points yesterday compared to the expectation of a 25 basis point hike. So this did create a fair amount of volatility yesterday. The deposit rate was also increased to 0%, moving the rates out of negative territory for the first time since 2014. In terms of the comments, they said that there will be front loading of hikes. The front loading of hikes will allow for the bank to make a transition to a meeting by meeting in terms of rate decisions. It also added that a further normalization of rates will be appropriate at upcoming meetings. In terms of what's going on elsewhere in Europe, Italy continues to face issues with regards to its political situation. It continues to undermine the currency and the major index there, the MIB. The Italian Prime Minister Draghi announced his resignation with reports that new elections are likely to be held on September the 18th as the governing coalition fractured. A bit of a warning sign maybe for the rest of Europe that potentially not right wing, but right-sided of the political front is starting to gain a bit of traction in Italy, and whether or not that could potentially spread to the rest of Europe. The euro was unable to hold any of the gains yesterday. It spiked after the ECB decision, but failed to hold on to its best levels, and there were further doubts whether the ECB would be able to tighten substantially over the medium term. And there were further reservations over the gas supplies amid a high degree of uncertainty surrounding supplies from Russia. In terms of the economic data in the US, we had the Philly Fed index number yesterday, and the survey dipped to minus 12.1 for July from a previous reading of minus 3.3, and this was well below the consensus forecast of positive 1. Although shipments increased at a faster rate, there was a sharp decline in new unfilled orders, which obviously isn't great. Companies were less optimistic over the outlook, with the 6-month outlook reading at its lowest level since 1979. As a result of everything that happened yesterday, we saw US yields decline after the US data, with the 10-year yield declining to just below 2.9% and the 2-year close to 3.1%. The global PMI data in focus today. The latest data is coming out from the Euro area, the UK and the US. The data will be important in assessing the global outlook and the relative performance among major economies. And we've also had some retail sales data already from the UK today. And sales declined 0.1% for June, which was actually slightly stronger than the expectations of a 0.3 decline. And the consumer confidence index held at a record low for July. So let's take a look at the price action amongst a number of assets. Going to start off, as we usually do, with FX. I'm going to take a look at the dollar index. So let's go to the daily chart. This continues to be in corrective mode. Obviously, the underlying trend remains very bullish, but yesterday we posted further declines, actually engulfing the gains, the minor gains that we made in the session before. We are posting some green today, up by 0.15% as things stand, but already off of the best levels of the session, and looks set to test this short-term bullish trend and this big support level that we have here at 105.78. So that is the key level to watch for. Whether or not we're going to see some buying interest return and the overall trend continue, or whether or not this may actually trigger a deeper correction in price. If we get a break below 105.78, then as that arrow suggests, we may see a further decline towards this kind of level at 101.30. So taking a look at Euro US dollar, as we said yesterday, and really the daily chart doesn't do it too much justice. We did see some buying, but it was off of the best levels of the session. We did engulf all of the losses made in the previous session on the 20th of July, but we're posting a bit of red today. So we've got this big resistance level above at 103.40 that we're trying to target. And again, it will be a crucial test to see if the bulls have got the appetite to push this higher, or whether or not it will just simply be a correction within the long-term downtrend. So important test coming up there for Euro USD. If we take a look at cable, this continues to do not very much really. The gains and losses in terms of what we're seeing in sterling and the US dollar are pretty much offsetting each other and not really going anywhere. So a lot of indecision at the moment on this chart. We were hoping to see a break of this ending wedge formation and a removal of the resistance at 120.56, but we haven't seen that yet. If we do see a move above these levels, then it could trigger decent buying appetite in the short term, maybe some short covering as well on cable. But at the moment, we haven't seen that, and we are seeing quite a bit of indecision. So really tough market to call as things stand at the moment. Taking a look at euro sterling, obviously we saw a big spike to the upside from the euro yesterday, but we reversed a lot of that. We still managed to hold on to gains yesterday, but overall not really getting any clear direction. Following the break of the channel here that we've got on the daily chart, prices still look to be being capped and being held below that, so there is potential for lower prices there. If we take a look at some of the other currencies linked to the US dollar, we can see Aussie versus the US dollar continued to climb yesterday, given the weakness that we saw in the US dollar. We are approaching a downtrend resistance line, so it'd be interesting to see what sort of reaction we get there. If we take a look at New Zealand dollar versus the US dollar, following the break of this ending wedge, we've seen a decent move to the upside. Bit of selling yesterday, but then we saw that all come back and prices close higher on the session. Dollar CAD, let's take a quick look at that. So we saw a false breakout last week above 130.76, failed to hold on to those gains, and the reversal has been pretty sharp to the downside. We've got some support here at 128.19 from this swing low here on the 28th of June. If that gets taken out, then the chances are we're going to continue to see this market trade in a range bound fashion towards the lower end of that range, which comes in at 124.53. Take a look at dollar yen, that continues to remain at elevated levels, but we did see some evidence of a bit of a reversal yesterday. We engulfed all the gains, well, the minor gains that we made on the 20th of July, and posted a fairly chunky looking red candle yesterday. So maybe we're in for a bit of a correction on this as well. Obviously, it's been pretty relentless for some time now. Very short-term uptrend line here that we've highlighted. We saw a break of that yesterday. Will that trigger further declines? We'll have to wait and see. But clearly, the dollar is in minor corrective mode at the moment, so it wouldn't be a surprise if we did see this ease off just a touch. Okay, let's take a look at cryptocurrencies then. So the Bitcoin chart, we saw the break of this triangle, which indicated maybe a short-term bottom on Bitcoin. Really nice push to the upside through this resistance at 21,866. We saw prices pretty much stall yesterday and doing the same thing today, sort of flittering between gains and losses as things stand. We've got some resistance to target on the upside at 25,338, and then above that at 26,137. So still looks as though there is a bit of appetite there from the bulls to potentially push this higher. We are holding above that breakout level that we posted earlier in the week. So we'll have to wait and see whether or not the bulls have the appetite to continue pushing this higher. I wouldn't rule out a move back to 21.86 to retest this new support. If we get some evidence of buying interest here, then that will indicate that we could be in for a bit of a move to the upside there. Ethereum's been doing a pretty good job outperforming Bitcoin, actually. If we look at sort of a like-for-like chart, we saw the breakout above 1266 over the weekend, last weekend. Prices moved to the upside, been a little bit flat, sort of choppy, but ultimately still pushing forward on the daily chart. We've got a resistance level quite close by at 1682, so it'll be interesting to see what sort of reaction we get there. If we can start pushing above that, then maybe we can head towards 1930, and then we can maybe start thinking about a break of this short-term downtrend line. And if that occurs, then of course that would be a pretty encouraging sign for crypto enthusiasts, and maybe we can start looking for an even larger correction, maybe up to around 2,400. Let's move on to commodities now, and I'm going to start off with WTI. So big range highlighted on the daily chart. We did look as though we were going to break below that at the end of last week, but the bulls came back to the rescue and pushed prices higher. We are rolling over again to the downside, so it'll be interesting to see if this support level again can do a decent job. If we get a close below this green band of support that we've highlighted on the chart, I know we've been below it before, but I want to see a close below it, then we could be in for a deeper correction in oil and prices could start heading lower. So that will be a very interesting watch. Some interest actually in gold and silver yesterday. So I've been talking about these markets over the last couple of weeks as being really not very good at all, really struggling to go anywhere, lots of indecision. But yesterday we saw a move lower and we saw this 61.8% Fibonacci retracement level hit and also come pretty close to these levels of support here that we've seen previously going back to March 2021. So this has also been combined with a really nice reversal candle, a really big bullish outside day. So this is when we make lows below the low of the day previous, but then close above the highs of the day previous, which we did yesterday. So we've engulfed all of yesterday's 2 days ago price action and closed on the front foot. So maybe there is some potential for this to move higher in the very short term. That is the sort of candle that will attract speculators to try and get on board this and try and push prices higher. Ultimately, I don't think the price will get too high. I think prices could be potentially capped around this 1786 level, but that would do. From a risk reward perspective, if we were to buy on the close of that candle yesterday, given it was a really nice reversal, targeting that resistance there with a stop loss just below the low of yesterday's session. Well, I say that'll do. It won't actually. From a risk reward perspective, we don't even get 2-to-1 on that. So that's a little bit of a concern. So maybe the risk reward isn't as favorable as I first thought. But that is a decent reversal candle, whichever way you look at it. So if we start targeting maybe levels a bit higher up to this resistance here at 1879, then the risk reward starts to look that little bit more attractive. Similar situation on silver, actually. Not as impressive on the reversal candle that we posted, but we didn't make new lows yesterday, but we did form a bit of a bullish hammer candle, and this pretty much comes in line with this 61.8% Fibonacci retracement level. And if we go back to the left hand side, you can see there's a number of highs here that are offering some encouragement and potential support for silver, but we have overshot that a little bit. That would be the sort of support level that I'd be looking to do a job. If we can see a close above that and we get some further encouragement on the candles, then that may suggest that we're going to see a bit of a correction to the upside. And again, would be looking to target this resistance up here at 2045, very similar to what we saw in gold in terms of we've got this low from around the 13th of May, sort of hanging out by itself and remains untested. So that could be a decent level to target. Just looking at that from a risk reward perspective, if we were to buy that now and target that level and place a stop loss below the recent lows, then the risk reward is a little bit more favorable on this. 2.43 as a risk reward ratio on silver would be quite encouraging and quite attractive for speculators. So we'll wait and see if that's got any more in it on the upside. Okay, let's go to indices then. And let's start with DAX. So obviously impacted yesterday by what we saw from the ECB. Pretty indecisive all in all. It looks as though we posted a short-term bottom on DAX. This is the daily chart. Short-term double bottom pattern on the break above 13,025. Really impulsive candle. A little bit of a pullback. Yesterday, I mean, ideally a pullback to that 13,025 level would have been nice, but we didn't see it. And in fact, what we just saw was quite a bit of indecision, really. So it was a doji style candle. And at the moment, we're not really getting any follow through to the upside. Very muted price action to start the trading day. So potential for this just to continue trading within a range. So again, from a risk reward perspective, buying here, targeting a move to the upper end of the range offers some decent upside potential. But of course, you need to keep an eye on those risk reward ratios to make sure that they are favorable. So assuming that this level at 13,025 is going to hold, then maybe we could put a stop loss somewhere around there, around 12,791, and that gives us around 3.6 R as a risk reward ratio. But that's a daily chart, so obviously going to take a little while longer to potentially play out. Okay, let's look at Nasdaq. Excuse the crude drawings there, but basically what I'm hoping that we can see here, following the break above this triangle pattern at 12,225, is a move higher towards this resistance at 12,941. So following the break, we have seen a bit of follow through to the upside, which is encouraging. Not much to go by yet. It's still very early in the session, of course. But if we can get up to this kind of resistance level here, then maybe what we are doing is forming some sort of rounded bottom formation, and that would offer some encouragement to the bulls on this one. So a nice breakout here, then we've got a lot of white space to potentially move into on the upside. So looking a little bit healthier on the Nasdaq front, but I will caution, as I mentioned earlier in the week, with the longer term charts, is the weekly chart on the Nasdaq. If we take a look at where most participation has taken place from the lows in March 2020 to the highs that we posted in November last year, what we have is this red line here, which indicates the point of control. So this is where most trading has taken place throughout this entire period. And these levels can do pretty good jobs as resistance and support levels if you find them on the chart. So we've got a big test upcoming on Nasdaq, and that comes in around 12,895. So it's going to take something pretty special, I think, to help the bulls get through that. There's going to be a lot of resistance there. So it could be a case of we're just going to get a retest into what I'm proposing is a neckline of a large top pattern. And if we fail to overcome that, then we may see a deeper correction take place over the more medium term. So do bear that in mind. You don't want to get sucked into any sort of bull trap here, given that we have seen a good few days of gains. It may just be that this is a correction within a downtrend. So please bear that in mind. Okay, let's take a look at the FTSE 100. Really not much going on here. Still continues to be very choppy and very range bound. We did see a nice impulsive candle posted on the 19th of July, but then we pretty much unwound half of those gains in the following session. If we look at yesterday's price action, very muted, very much inside of the body of the candle that we posted in the previous session, and today very little direction to get to give us any clues about where price is heading today. So really choppy stuff, really difficult market to trade. Nothing's changed on that front, so please be careful on that. Finally, on the S&P 500, we've seen a breakout of this triangle pattern, which could lead to a correction higher towards around 4106. Bit of cluster of price action here to potentially test, and maybe even the neckline of this head and shoulders pattern as well, which is what I've got drawn on the chart. So again, could be a rally that sort of sucks in a few bargain hunters, but ultimately could just be a retest of the sort of downtrend and testing the bearish resolve, which may then lead to further decline. So still a little bit hard to call at this stage. So just be nimble, I think. Make sure you've got appropriate risk management in place according to obviously the value of your accounts. Okay, so that's that. No stocks today. Jamie will be back next week and he can pitch in with some stocks, and it will be an interesting look at certainly some of the stocks out there because we are in the midst of earnings season at the minute. So there's plenty to talk about, but we'll do a deeper dive into that next week, and Steve will be back as well, so we can maybe spend a little bit more time on some of these assets that we look at. Okay, so gun to the head challenge. This is what me and the guys participate in every day. We pick a live trade on the video. Each of the ideas must have a stop and a target. All the ideas are placed at market. We don't do much research into these. We're just picking something that we fancy. You know, if we had a gun to our head, what would we trade effectively? Now, these ideas expire at 9 p.m. or when the stops or the targets are hit, and we maintain a performance spreadsheet on these based on risking 1% of trading capital on a per trade basis. Also, if you want to check these trade ideas out, please feel free to do so. You will find them all on our TradingView profile, which is signal_center. And yesterday, I actually went short of New Zealand dollar versus the US dollar. And the reason being, there was a nice little setup going on the hourly chart. We've seen a bullish channel, we saw a break of that channel and also a small head and shoulders top. So it was all lining up really nicely for me on that yesterday, and really liked what I was seeing. And we did get quite a decent move initially to the downside, but then following the flurry of economic data that we had out yesterday, most notably obviously the ECB, we saw prices then move against it. So at 9 p.m, so going by 8 o'clock there, because obviously that's when the candle closed at 9 p.m. The close then was offside by around 0.83 R. So I was offside on that one at the close, which can happen. If you'd closed it at 9 p.m, then you would have avoided a full stop out and a 1R loss. But it was all looking very nice on that one on the technical front. But sadly, not all of these technical patterns play out in the way that you would expect, which is why it's important to have stop losses and points where you can get out of the market. So now I've got to find a new trade idea. I haven't really done any scouting through the charts, so this really is on the fly today. There were a couple of markets there, just looking at them on the daily, that look quite interesting. So let's see if I can marry up something with an intraday chart that looks quite appealing to me. Let's have a quick look. I'm going to get my trusty 10-period exponential moving average on the chart as well, see if that can give me any clues about a switch in momentum maybe in a certain market. Nothing really doing there. Let's have a look at some of the FX. Okay, I'm going to go with this, and I noticed this yesterday actually on the daily chart, which is what brought it to my attention. So this is the daily chart on Euro Yen. Decent uptrend, as you can see here. This started back in March earlier this year. We saw a breakdown followed by a move to the downside, but in recent sessions we've seen a move higher to retest the underside of this broken trend channel. And what really has attracted me to this is this candle that we posted yesterday. So as you can see, we moved all the way higher, but actually closed lower than the day before, posting a really large shooting star candle, which is pretty bearish whichever way you look at it. So looking at the intraday charts, we can see that we've got a bit of momentum on the downside over the last hour. Things have turned south. So let's get a short idea on that. So I'm going to sell that at the current price of 140.07. I'm going to go quite aggressive with a stop above the high that we just posted over the last hour, which will come in at 140.76, which is around 68, 70 ticks. And then I'm going to look for a move to the downside. Now, I'm immediately drawn to these lows here. This is an hourly chart. So it might be a little bit ambitious, but what the hell, let's go for it. It's Friday, anything can happen. So I'm going to target a move down to 136.90. And that gives me a risk reward ratio on this trade of 4.62. So for every $1 that I risk, I'm looking to make $4.62 in return. So let's just highlight this a little bit. So going by that high there, so going to stop just above that, and potentially if we look across, we've got some resistance there. So yeah, that's all adding up quite nicely. I like the looks of that. That'll work for me. I could keep going on the annotations, potentially a channel here as well. Let's have a look. Yeah, that works out quite nicely. So we've seen a break of that. We've seen a little bit of a correction over the last few hours, and then pretty much given that all back in the last hour. So indicating that there's been a bit of a shift to momentum on the momentum to the downside. So I'm going to sell that now. That's my trade of the day. If you want to copy that, feel free to do so. I'm going to publish it up on TradingView shortly. And even if you don't want to follow it, you can at least track how it progresses throughout the trading session. Okay, what have we got today on the data front? Let's take a quick look. So we've had a few PMIs out already. We've had the UK one. We've got the German one in 6 minutes' time. So keep an eye out for that if you've got any exposure to euro-related assets, whether that be euro currency or European indices. Sorry, the UK data is out at 9:30 today. That's a flash release. And then at 2:45 UK time, we've got the US PMI data. So plenty happening, plenty of volatility could occur as a result of these numbers today. Following on from that, next week we've got Australian consumer prices, so the latest read on inflation in Australia, and we've also got the all-important Federal Reserve policy decision, which again is on the 27th of July. And also, we've got a fair amount of stocks reporting next week as well. So it could be a pretty tasty one for us traders. Okay, that's it from me. Hope you've all had a very good week. Hopefully the videos have been useful and given you a bit of a steer on what to expect on the days ahead. Have a great weekend, everybody, and we'll be back with a full complement on Monday, Steve and Jamie. And until then, everybody, trade safe. Goodbye.